Hi, everyone. This is Damien, the financial guru here with the Money Coach Show. Tara is out today, but we still have Robert here with us. And we are going to be covering a 1003 application, or what is known as a uniform residential loan application. And this is basically when you're trying to go ahead and go through and apply for a home. So, we are going to let Robert take over right now with a market update since T is not here. Robert, take it away with our market update, please.
Thank you, Damien. And I hope I do it justice today because Ed, I'm not as easy on the eyes as our colleague Tara. But you know what? Hey, I'm still going to be able to provide some valuable information that you guys need. And I hope the information that we provide is why you're tuning in today because, hey, So, like Damien said, I'm going to provide that market update. And you know what? The market it's volatile like always, but still, it's not that bad. The iron is still hot and want to be able to make sure that you guys can see exactly how we track the market. And it's a great tool that we'll be able to show you guys. And let me just go ahead and, even share my screen if I may. And it's going to be
Please, please.
an awesome way for you guys to see what's going on here. So, I'm so sorry. Let me just make sure everything is copacetic here. So I have plenty of things on my screen. I don't want to give away too much information for people, but that they shouldn't have. But as you can see, this is a yearly rate that what I'm showing here, and it's basically what the average closing is. And I just have a conforming and FHA closing what the average is for them. And last year around this time, you can see it was mid to high sevens. It's like, and that was extremely high. And then this year, as we were in the new market, we had that awesome cut last month, as where it was in September, at the end of September. But like I mentioned, the rates did go up a little bit, but still a lot better than what they were last year. As you can see right now, the average closing is anywhere between 6.4 for conforming to 6.1 for an FHA. And it's not, the market isn't closed yet, so they can drop a little. They can also rise a little bit. So this is why I say the iron is still hot. So let's strike. If it's a purchase that you're looking for and you want to get into that purchase home, and we can look at the numbers for you as we're going to go through a 1003 a little bit later on. But we want to make sure that you have the optimal information possible. So when you're going to that bargaining table, you're going to gather your finances. We can help you with that. And this is, I don't mean to deviate too much, but this is how powerful Loan and Key is when we're giving information out to you guys, when we're having that first connection, that second, third conversation. We'll even be able to say, hey, once we ran your credit and filled out everything, we can even say, hey, what's the average for your credit score? Say you have, a 730. We can even pull that up and say, hey, this is what the average closing was for both the conforming and FHA. It just basically compiles them both and gives us an average aggregate. And you know what? This is, again, we want to be able to share as much information with you guys as possible because Loan and Key, you know what? Hey, we're in the business of obviously originating loans. But you know what we get excited about, and Damien can tell you, as when I first bought my home, it's exciting. And we want to share that excitement with you. We want to go on that experience with you guys. And we want to be able to make sure you guys, again, I'm going to say it over and over and over, well armed with financial information, whether it be how to purchase a home, how to, navigate, your retirement, as our financial guru Damien does quite well. And,
Cheat
and
sheet.
give you
The cheat sheet.
yes, the cheat sheet. But we want to make sure that you guys are extremely armed with all the information at hand because again, information is key. It's valuable. And you know what? If you guys don't have it, come to us at Loan and Key. We'll be happy to give you that information. It doesn't cost anything for information. You know what? It's what you do with that information that can cost you. And we want to be able to cut that cost in half for you. So you're not going in there being bamboozled, being behooved. We don't want to do that because we want to be that trusted mortgage advisor, that trusted lending company, and ultimately your trusted friend, because that's what we're doing. That's what we're doing. We're building relationships with our clients, with colleagues, with everybody. We want to be able to point you in the right direction. And a prelude to what's to come within our show is we want to be able to provide you with information, not only from a lending aspect, from also, you know, a title agency's aspect, from a realtor's aspect. We have our financial guru for our retirement
Don't
aspect.
give
And with
it all
that,
away, Robert. Don't give it all away.
no, no,
Um,
no, no. So with that, I'm going to go
gotta
ahead and
save
yield back for
something.
my
We gotta
market
save
report.
something. All right. Well, with that said, thank you, Robert, for an outstanding market update. I'm sure T would be really proud. Um, we're gonna go into today's financial guru tip, and then we're gonna get back to the rest of the meat and potato of today's call. Financial guru tip today is going to be about rollovers. What is a rollover? A rollover is when you had previously worked at a job and had a 401k account, but you are no longer at that job. You have found a new job. And now you've started a new 401k. Pretty common. I've done that several times. Some of you, Robert.
Oh, yeah.
But with that said, though, that money that is in your old 401k or old 401ks, if you change jobs often, it gets defaulted to what is known as a money market account. A money market account in today's current market does get a return of about 4.75 because it's floating with the Fed rate. However, normally, traditionally, money markets don't make a very good ROI. You usually don't make a lot of money leaving them there. They usually always advise you, financial advisors. Usually, there's a lot of other people, analysts, the markets will always say, hey, if you can, try and get your money into stocks, try and get your money into the market, bonds, any kind of financial instrument to that. So with that said, it's really important that you guys don't sit around or forget if you do have any old 401ks or i.e. rollovers, because you want to get that information, especially if you are an avid investor like Robert and myself. We invest aggressively, and if you're just leaving your rollover for anywhere, even just a few months, you're losing money. But I unfortunately have known people where they accidentally left a rollover for over a year, and that
I've
was
done it. I've done it, and it cost heavily
it
doing that.
hurts. It
Yeah.
hurts, man. It hurts. But I'm here to let everybody know it doesn't have to hurt. And the real simple solution is you can go ahead and ask us. It's not a complex process. You normally have to contact the human resources department in your previous job. Usually, if they don't handle it in-house, they have somebody that handles their 401ks for said company, and they will usually give you the instructions on how to go ahead. It's an application that you have to fill out. It's a bit lengthy. On average, it's a few pages, but it needs to be able to know, hey, we need to identify that it is in fact you, and that your money, and you have a list of options on those applications of how you want your money to be either transferred over to a 401k, or maybe you have an IRA, and you have, which is an individual retirement account. That's all the IRA stands for, folks. And so maybe you want to put your rollover in that. That they have, the application is applicable on any of those options. I would strongly recommend against from cashing out. That's usually your third option they'll leave on the application. You don't want to cash out, especially if you're not retired. And I mean, unless you're a millionaire in your 60s, I would strongly advise against it. But that, in a nutshell, is what you should be doing. Don't forget about your rollers if you have them. Combine them with your current retirement assets. The more money you have in your pool, the more you will be making on your ROI, on your yield, and overall on your investment. So that's the financial guru tip. I am going to go ahead and now hand this back over to Robert. He is going to go ahead and get more in the meat and potatoes with the 1003 application. So go ahead, Robert, take it away.
Thank you, Damien. And you know what? Also, on that note, I'm going to say this. This is huge. Okay, so a lot of companies use ADP because this was my mistake before. Say you, if that was the organization that you were at before used ADP, you can actually go to ADP directly and log into your account, so you don't have to go to that old human resources department, because it may be somebody different. You may not have the same relationships that you had before. It may have changed up completely, as it did for me. And that's where ADP, it was awesome. They were able to allow me to log in. I did have to jump through a few hoops to let them know I was who I am, by providing special documentation. But and then you get to manage it yourself. And that, Damien, I have to say thank you to you, because you've allowed me to understand that. And hey, that knowledge that I acquired then was powerful. And I'm not ashamed to say that was like double digit, investment returns that I was amazed about. I was floored, something that my previous employer wasn't getting. So make sure you reach out to us at Loan and Key. So
good point. Good point. It feels good to get good returns, doesn't it?
Oh yes, oh yes. You have no idea. Well, you have a very good idea.
Oh no, I have a pretty good idea, bro. I have a pretty good idea.
So and I digress.
No. Good point. Good point about the ADP, Robert. Really good point, man. And it's only to help people just manage their retirement. So good point on that. But hey, man, take it away. Let's go ahead and get into the 1003 application for the folks out there.
Okay, perfect. So the 1003 application, the Uniform Residential Loan Application, last week I had my words all jumbled up because there's a lot that goes on in here when I get excited. I want to give you guys information, and Damien's known me for 20 plus years now, and I've been this way since I was knee high to a duck, and he can tell you that. And just because there's a lot of enthusiasm with being able to share this knowledge, because it's powerful, so as we go through that 1003 application, I want to make sure that you guys have a full understanding that that application is going to be the first thing you need to fill out to be able to start that loan process. And with that being said, I do have an example of what we will send you for that 1003 application.
Yeah, show them, Robert. Show them what a 1003 application looks like.
Wonderful. And you know what, as you can see here, as I'm sharing my screen, it has a variable information in here that allows you to, fill out information at will. You don't have to print this out. We will send you a document that you can just type it all in. And you know what, all except for the top part in gray here, this is for us to fill out, not for you. But you can see that there's going to be, the things that I'm highlighting here, anything with the light blue underneath it is something that you're going to have to fill out. We're going to have to make sure you are who you say you are, so we can make sure all of the information is listed and provided for, for documentation, and honestly, so that lender can give you the money. Because I'm going to be honest with you, I'm going to use a Warren Buffett quote. A mortgage loan is going to be the largest amount of money with the lowest interest rate you're ever going to be able to borrow. And that's huge. It's like, even at last year's high at 7.8%, you're borrowing $300,000 at that. It's like, come on, you can go and get a credit card for $20,000 and you're still going to be in the high teens. And that's if you have a good credit score. You can have an 800 credit score and you're still going to get that type of interest rate on 20,000. So this is why it's imperative that you're truthful with all this information. And as you can see, I know I have it blown up pretty here. I can minimize it, but I want to make sure that you guys can see that it does seem arduous when you're filling out this information. You have to be truthful upon it, with any open source on this document that you're able to. And as you can see, it's going to ask you, certain employment information. Obviously, that first part of it, it's going to ask you information about who you are. Then employment information. You're going to go through, and if it's other employment information, because they're going to want to make sure that you've been employed for at least 2 years. And, as we've spoken about that in previous episodes, we have to make sure you're credible, because again, $300,000 at a single digit, interest rate, that's phenomenal in my opinion. It's amazing. And you know what, I wonder so many times how when people can afford to buy and they choose to rent, I wonder why. What's your MO for that? And people have their own, and I don't judge. I have that wonder why. But I digress. Let me get back to this 1003 application. As you go through, you're going to see that there's other information, income sources, what all the income sources that are going to be, beneficial towards you. many people have more than just their job that they're going to be able to claim income on. There's many different types of annuities that, hey, if you're getting money deposited to you, money given to you, you're going to have to be able to show that within inside of here. You want to make sure that the lender has all the information they have, so they don't have to question, should we give them money? Because we at Loan and Key, as we mentioned before, we're brokers. We shop as many different lenders, so you don't have to. And we get wholesale pricing. What that means? Wholesale pricing is huge. It's not like you're going to your big box bank, big box lender, and they say, here's your rate, this is all we can give you. We look at that rate and say, who can give us a better one? And we shop around for you. We're licensed professionals, and we take this test so we can go out and do that. And it's daunting, but it's worth it, because at the end of the day, my enthusiasm, and when you guys get on that phone with me, you'll hear that enthusiasm, because I love it. Being a homeowner is one of the most enriching things that I've been able to do in my life, obviously, besides being married and having kids. It's like being that homeowner provides a way to create generational wealth that you always hear about. And hey, it starts with this 1003 application here. There's some, like I said, it seems to be arduous, but it's not. We will walk you through this if need be. We will make sure that, hey, what, did you fill out section 3, your financial information for real estate? What, we'll go down and make sure all the I's are dotted and all the T's are crossed, to make sure, hey, the loan and property information, because not only is this, once this is filled out, then we have 3 business days to provide you with an LLE. We provided what that is in a previous show, but no big deal. We'll go over as many things as possible if we need to. What? And along with this piece of information, we want to make sure that you're well armed. You're well armed, because again, at the end of the day, that's what we're here for. We want to make sure that you guys have all this information. So once we have that 1003 filled out, and there's primarily 6 pieces of information we're going to need from you.
What are the 6, Robert?
Your full name, your full name, your income, your social security number, your property address, the purchase price, and the loan amount. And what, let me go back to that 4th one I mentioned. The property address isn't going to be your property address, because we're going to have that on that loan application. It's going to be the subject property address that you're going to want to purchase, or that you're doing a refinance for. So those 6 pieces of information, your full name, your income, your social security number, your property address, subject property address, that is, and the purchase price and the loan amount, then we get the ball rolling. Then we can make sure that LE is sent out to you. We want to make sure we can get you the best rate. We won't be able to lock in a rate unless you pay for a lock, and we'll discuss all that at that time in junction. But there's a few other documents needed, because we want to make sure, and the lender that we will find the best rate for also has this information. So what, I'm going to say it now, get these other pieces of information ready. And even if it's like, hey, you're not going to be buying a house right now, but say January 2025 comes around, you're wanting to buy a house, what, these other documents that you're going to be needing, and it follows suit to that loan application, that 1003, we're going to need at least 2 forms of your government issued IDs. More than likely, it's going to be a driver's license or an ID card, and your social security card. We're going to want copies of those so the lender can have them on file. We're going to need, and that, that'll provide who you are. We pulled your credit report with your social security number, but we have that social security number to match that credit report because they want to see it. We want to be able to pull, we're going to need your 2 years of your W-2 forms. Then we're also going to need your most 2 recent months of pay stubs, so, and that's to make sure that, hey, that your job matches your 1003 application. We're going to need the purchase contract. And I'm going to have to say, even with your W-2s, have your paycheck stubs available, at least 2 months of them. More documentation is better than less, I always say. What? And then, the purchase offer agreement, or the sales contract, when you have already, said, hey, this is a home I'm going to buy, we need that as well. And I'm going to give you another quick note that I'm sorry, Damien, we didn't go over. Reach out to us at Loan and Key so we can get you a pre-approval. We're going to ask for all this documentation at the beginning for pre-approval, but that pre-approval is actually going to be almost like it's going to be just as good as cash. And I don't mean it like literally, but I mean it lets the buyer and the buyer's agent know, hey, Robert has all the documents ready. He's already went through the approval process to say he can afford this home. And we want to make sure that you get looked at that way too. Because when I bought my first home, I kid you not, all my neighbors went around and said that home was only up for 2 days before we saw a contract. And then we saw not even 30 days later, I was in that home. And that was because I had all this document prepared. So we want to make sure that you have all this information ready and at hand. And when me, Tara, Damien, when we speak to you over the phone, we're going to say, hey, here's the documents you need to have ready. So, we can make sure that your file goes through as soon as possible.
No,
Now,
Robert, it's a good point, man. When I bought my home, it was the same thing that you're talking about all the documents that are necessary, from the W-2s to the pay stubs to the bank statements. Have it ready, folks. We're gonna at Loan and Key, we're gonna work with you, and we're already gonna let you know, like, look, we're gonna be constantly needing this information. And the pay stubs, Robert brought up a really good point. Always just try and have new ones ready and available, because it's going to be something that is going to take a while, when you're going through this process of trying to find the right. Remember what Robert says. You're not marrying a rate, folks. You're marrying a home, and
yes.
you should take your time before you get married. Uh, so no, sorry. I'm just saying, but no,
No,
Robert. But good point on really reiterating the pay stubs, along with all the other documents that are necessary.
and you know what? And that brings up a valuable point. You marry the home, not the rate. And say you purchase now because you can afford to, your income says, and then rates get better 6 months, 9 months, a year from now, and you want to refinance. You're going to need all this documentation plus one more thing. And it's going to be your most recent mortgage statement. And you can get that from your servicer, and that's going to be who you're paying your monthly mortgage to. Because again, we want to make sure, hey, you know what, this is your home, this is everything is copacetic, and you can have all the information delivered to the lender on a silver platter. And then so once we have all this information, you will get that loan estimate again that we provided a lot of information for in a previous episode. But that loan estimate is going to have the breakdown of what a synopsis is of going to be your pity payment. That's principal, interest, taxes, insurance. It's going to have a synopsis of what your amortization schedule. And that is something no one really talks about. And an amortization schedule shows you 30, if it's a 30-year mortgage, it's going to show you 30 years of payments. It's going to have 360 payment schedules on there. So you're going to be able to say, oh, at month 210, I know what I'm going to be paying because, hey, you know what? Some of that interest has gone down and I'm paying more of the principal. If it's a 15-year, you're going to see 180 months. We want to be able to make sure you have all the information as possible because, again, at the end of the day, that's what we're about. And also with
No,
that LE, oh, I'm
that
sorry,
that
Damien.
was and that was good, Robert. And remember, folks, if you not really familiar with pity, we talk about that in the last episode. So just want to throw that in there for you, Robert.
Oh yeah, no, Damien. And honestly, we're always going to be talking about pity payments. We don't have a breakdown like we did in last episode on what a pity payment would look like. But reach out to us at Loan and Key. We will be able to provide that for you. And you know what? Just in case if you guys haven't noticed, all of our information will be down in the description. You can contact us. You can email us. We will get back to you. You know what? It's something that's it's crucial. It's like we want to make sure we can give you information in real time, much like I've given you information about the rates, what they look like in real time. I want to be able to give you this information. And I'm going to shamelessly plug this, as you hear every YouTube channel. If you're finding value in what we provide, hit that subscribe button, click that like, share it with everybody, because again, Damien and I and Tara, we're a three-man show. We're a small business, but we want to act as a huge powerhouse for you, the consumer, because at the end of the day, you know what? I'm going to say it. I'm just going to say it, Damien. You know what? Most loan officers, if you've ever spoken to a loan officer, they're going to say, okay, great. Here, give me your information. Now talk to my assistant. And bye-bye. You're not going to get that at Loan and Key. You're going to get loan officers talking to you. You're going to have real conversation with the person you're doing business with. You know what? We're going to be able to provide information about, hey, what the processor is looking at, what your underwriting is looking at. And you know what? We're going to go over all of that in later shows. So you guys will be well informed, because again, and make sure, again, like and subscribe, because when we do come out with those later shows, you'll be like, I have some more information. So with that, Damien, I'm done rambling. You're done with my enthusiasm for
No,
the
no,
time
no,
being.
no. Robert, thank you so much. Honestly, for everybody, that was an absolutely exquisite explanation of a uniform residential loan application. And it's not the most glamorous or enticing of subjects, but if you're going to get into a home and you're really serious, or just like Robert said, what if you had a kid? That's going to change your situation. You're going to need to get into a home. Lots of things can happen. Life changes. But I just want to say, Robert, really good, thorough, just covering of the 1003 application, what happens in the loan estimate and the rest of the process. And everybody, just so you know, here at Loan and Key, if you have any questions or concerns, we're mortgage brokers. That's what we're here to do. We're here to help you. Questions, concerns, let us know. But with that said, really, really good market update. Really great content. So happy, Robert, that you were able to really, really get into the meat and potatoes. This is really important, and so just thank you, like always. And like you said, folks, like and subscribe. But that's gonna do it here for this episode of the Money Coach Show. So this is Robert and Damien, the Financial Guru, signing out.
See it, everybody.
Bye.